mute your call, right? Okay, so over here on a chart, you may see that there are different different time frames, and traders make decision based on different time frames. So while someone is making a decision on the 1 hour time frame, another person is making a decision on the 4 hours time frame. Another person is also looking at the picture on the 1 day time frame. Another person is also looking at the picture on maybe a week time frame. A week time frame. Now, in all, the clear picture of the market is observed or seen at the higher time frame. So there may be different traders in the market, and someone makes decision to push the market on the lower time frame, and another person too is making decision on the higher time frame, which simply means the result that may be depicts out of the market may be different on different time frames. So if you are maybe a scalper, and a scalper may focus on maybe 5 minutes or 1 minute to 3 minutes or 5 minutes time frame, at most the 15 minutes. That's what the scalper may do. So he is making decision in this particular region, and there is another person also making decision based on what is happening within the past 1 hour or the next 1 hour or 24 hours. So do you think what is going to happen is going to be the same? What is going to happen within the same time frame will be the same? Will it be the same? Let me know. Will it be the same? Will it be the same? Will it be the same? Am I here alone? Will it be the same? Very good. It will never be what? It will never be the same. It will never be the same. That is what you need to know. It will never be the same. All right. So that is it. I guess I've been able to answer your question on the time frames. Okay. So I have downloaded the CoinGlass. Where do I go to get the same screen as yours? I have navigated on it but not winning. I've navigated on it but not winning. So over here on the CoinGlass, we have the features. We have the app. Sorry. So we have the app, and then also we also have the web page. We have the app and then the web page. So when you click on, go to Google Chrome. Okay. So on Chrome, you may see it here. On Chrome, you may see it. So let me see. Very good. So on Chrome, you may see them here, or you may see it here, right? So that is it. So you may either choose to use the web page, or you may use the app, and they are the same. Just that one thing that you should know is that in most user case or in most apps, the web page may present slight different information as compared to the app. So personally, sometimes there are some of the things, if I want to access on the app and I'm not getting it right, I will go to the page to the website or the web page to check it out to see what is also presented there. And I think mostly I get it accurately. So that is it. So if you're not getting it, please, you can use the web page. Please, co-host, take control of the meeting. What's happening? What's happening? Co-host, take control of the meeting. Why? What's happening? So let me see. Okay. I've downloaded. All right. So please throw more light on the number of trades in futures one can run in respect to the first buy in amount that one has. So throw more light on the number of trades in futures one can run in respect to the first buy in amount. Now, on the futures market, how many trades can you run? Now, the number of trades that you can trade or run, in the number of positions you can run may depends on one, your capital. Your capital. Do you get it? It may depend on your capital. Because the higher your capital, maybe the more you can trade different assets. But if you don't have more capital, and mostly even if your capital is too high, I always say that it is important for you to not defy the rules, because once you defy the rule, the market will lash you. The market will do what? Will lash you. So at least go for 1, 2, or 3 trades. At most is 3. Don't open too much positions. Don't overtrade. So 1 or 2, 3 trades are okay for you. When it closes, you pick another one. Because in trading, patience also matters. It's not always the case you need to make daily profits. It's not always the case you need to do what? Make daily profits. If care is not taken, you may end up regretting. You may end up regretting just because you may use the market to blow your account. You don't need to be chasing markets. Allow the market to flow in your favor. If you have a trade in the market and it is not working, it is not giving you the profits, and you have more money, fine. But don't chase the market. Just because you've not made any profits today doesn't mean that you should find ways and means to trade to make profits. Maybe that trade that got you liquidated, you got liquidated because you were chasing on different assets, and you push all the money in different assets. Meanwhile, there was capital that could have used to control that trade for you to survive in the market to make your profits. Now it has wiped everything. Do you get it? So please, that is what I can say. And with regards to your first buying amount, it may depend on your capital. It may depend on your capital, but in all, what I've been saying is at least or at most, if you are trading on a futures market, learn to use just 20% of your capital as your FBA. Use 20% of your capital as your FBA. So use 20% of your capital as your FBA. So if you have $500, or 500 USDT, just use 20% of 500 USDT as your first buying amount to trade. Just use 20% of 500 USDT. And mind you, if you have 20% of $500, which may be around 8 let's look at it. Let's look at it, Rebecca. So 500 times 20%, that is going to give you 100, right? So over here, if you have $100, that is going to give you, if you are going to assume you are using 5x, that is going to give you $500 as your FBA. That is going to give $500 as your FBA, which is not bad. And at the end of the day, when you make profits, 1% of $500 will give you smooth profits, and it's good to go. So I said at least use, or at most use 20% of your capital. Hope it's clear. Sorry. Hope it's clear. Please, I want you to share strategy for $50 capital for futures trading. So if you have $50, just the same, use 20% of $50 as your FBA. So 50 times 20% will give you 10. Will give you how much? 10. So over here, give you $10. So over here, we're going to use $10 times your leverage, which is 5x. So 10 times 5, that is going to give you $50. So you are going to use $40 to open margin calls. $40 to open what? Open margin calls. So it's very simple. Since you have $10 to open margin, $40 to open margin calls, or if your leverage is 10x2, that is 10 times 10, giving you 100. So it simply means your FBA will be 100, and then you use the $40 to open what? Open the margin calls. All right. So that will be helpful to you. Hope that will be helpful to you. So the strategy that you want is just 20% of your capital, 20%, and then use the $40 to open margin calls. Okay. So my hand is up. Okay. You'll be asked to unmute. Let me answer these questions, then I attend to you, please. What is the advantage of pausing a trade that is against you? What is the advantage of pausing a trade that is against you? So mostly on the futures market, pausing a trade has got two sides. Okay, sometimes you pause a trade. Mostly a trade that is against you, you pause it and you realize that it will close in your exchange automatic, to which it has happened to me several times. When a trade is against you, you pause it. By the time you realize it has closed in your exchange, once it's closed in your exchange, that is all. It simply means you have to get back to close the trade. But then, when you set up a trade, you can personally choose to pause the trade. When you set up a trade, you can decide to choose to do what? You can decide to pause the trade automatic. Since your actual take profit has not been triggered, you can decide to do what? To follow the process and then do what? Pause it. But mostly, on the other hand, too, when a trade is extensively against you and then you pause it, you may also see the other side of it as the trade being closed in your exchange was automatic. So that is what you need to take note of. Let's say using a capital of $200, how many trades can you open in futures? How many trades can you open in futures? Yes, just go for one trade, at most is two. Just go for one trade, at most is what? At most is two. Just go for one trade, at most is what? Is two. Say you entered a futures trade last time, turn precisely, and you long it with high TP. What was the reason for such decision? What was the reason for such decision? All right. What was the reason for such decision? Yes, of course, I still have that turn in the market. I still have that turn in the market. I still have that turn in the market, and I'm okay with turn. No matter how deep it goes, I'm still okay with turn because turn is a very good friend of mine. Okay, so what was the reason for such decision? Now, the last time on my channel, I said something. Those who gave much attention to that, um, I said there are some assets. Listen, there are some assets that you can hodl on the futures market. There are some assets you can hodl on the futures market using leverage. And most of you don't know you can hodl assets on the futures market using leverage. And sometimes hodling does not always the case necessarily means pausing the trade. Since you know the momentum of that particular coin, it can perform better. For instance, assets like Solana. It will take time before Solana can liquidate you. So if you want to short Solana or if you want to long Solana, you can go on a long-term trade. This is not just an ordinary trade, but what? But what? On a long-term decision, long-term what? Trade. So over here, with a long-term trade, I can decide to increase my profit to maybe 5%, 10%, 20%. Then leave the trade in the market because I know how the momentum can drive. I know how it can go in the market and I know how secured I can also be in the market. So I can choose to open that particular trade, give it a huge take profit and leave it in the market whilst I open margin calls. And so far as I open margin calls, when the market is going against me, it will continue to buy. It will buy and buy and buy. Then I'll be making profits on the sub sales whilst I wait for the trade to hit my take profit or my take profit to be what? To be triggered. Please, do you get it? On the futures market, do you get it? Get it? If you understand what I'm saying, give me one in the chat for me to know. Yes, yes. So if you pause a trade in futures and liquidation price, can it be closed automatic? Yes, it will be closed. You'll be liquidated. You will be liquidated. Yes, you will be liquidated. All right. Okay, so now let me get back. Those whose hands are up. Samik. Samik, your hand is up. Samik, your hand is up. And you've been asked to unmute. Let me see. Yes, you've been asked to unmute. Ask your question. Ask your question. Samik, proceed to ask your question. Proceed to do what? Ask your question.
Hello. Hello.
All right. Hello, we are listening to you.
Yeah. Please, I want I wanted to ask this question. In futures, if I'm trading futures and then I have margin maybe $30 in the margin call and they liquidate me. all the 30 will be liquidated, and on my I am using isolated, and they liquidate me. All the 30 will be liquidated, or the first buying amount will be liquidated only.
All right. Okay, so that is good to ask. So if I get liquidated, now the issue of liquidation is simple, and this is how it goes. So let me get my okay. Now before let me use this opportunity. I've several times I've heard people saying, um, if they liquidate me, if they liquidate me, no one liquidates you. There is no one at the backyard liquidating you. There is no one at the backyard liquidating you. So those of you that have been saying, if they liquidate me, who is there to liquidate you? Liquidation simply means your money is insufficient to continue the contracts. Liquidation simply means your money is insufficient to do what? To continue the contract. That is the meaning of liquidation. So no one is there liquidating you. Your money is insufficient to continue the contract, and your contract has ceased. It has ceased, or the deal must close. So just like maybe um you went for loan elsewhere, and you said you have a car, so you want to use the car as collateral. Now you couldn't pay the loan, okay? You couldn't pay the loan on time. So since you've used the car as collateral, it's an agreement. So once you fill the agreement, your car will be sold to um I mean take charge of what of that particular contract. So over here the question is, will my first buying amount be liquidated, or um my total amount? Okay, so that comes to do with the type of margin you are using. Either you are using cross margin or isolated margin. Either you are using cross margin or isolated margin. Now, if you are using isolated margin and you are liquidated, you liquidate with the only funds you have in the market. So if $30 is your margin, you get liquidated with that $30. But on cross margin, if you are trading with, let's say, $30 and you still have $50 reserved in your account, not only the $30 that will be liquidated, but also the $50 too will be liquidated. Do you get it? Not only the $30 that will be liquidated, but also the $50 too will be liquidated. The $50 too will be what? Will be liquidated. Hope you get it. Hope you get it. Hope you get it. Okay. All right. So, what is the purpose of pausing a trade? So, on an actual note, on the spot market, you pause a trade with the intention that you want to hit your profit, or you want the market to exceed your actual profit, or you want to make profit beyond your take profit. That is the reason why you pause a trade, right? Okay, so pausing will be in the room of waiting. Pausing will be in the room of what? Waiting. How can we get a full Royal presentation slide for seminars and trainings? How can we get a full Royal presentation slide for seminars and trainings? So I think if you're on any of our platforms like the Revolution or anything, we keep dropping such informations on that platform. So otherwise, you can also ask your upline, and he or she may be able to assist by presenting some of the documents to you. Okay, so please, can you let us know about the charging for meme coins as compared to those that are not meme coins? Can you let us know the charging of meme coins as compared to those that are not meme coins? All right, now when it comes to this issue of funding fee. When it comes to the issue of funding fee, let me see if okay. Let me unshare and reshare. Let me okay. When it comes to the issue of funding fee, okay. Now, meme coins and other coins, what is the rate? Every asset, in fact, this has nothing to do with either meme coin or um the rate has nothing to do with meme coin or um utility tokens. The rate has to do with how buyers, okay, and sellers intend to push the assets. So the price or the charges of fund fee follow two rules. One is demand and supply. Demand and supply. And then the next one is ideally it's demand and supply. And then the basic one is the order book. The order book. So I will not talk about the order book, but let's talk about the demand and supply. Why some may charge as compared to others. Now we have explained to you in most of, so you can go back to the YouTube channel and then watch some of the videos, you understand. Now listen, let's assume we are on long position, and all traders are pushing the market. They are all buying. They are all buying. They are all buying. So since all traders are buying BTC, it simply means the price of BTC is becoming expensive, which simply means the demand is high. Demand is what? The demand zone is high. So the charge or the fee will be increased. Once the fee is increased, a lot of people will begin to run away on these assets. A lot of people begin to do what? Run away, because no one would like to pay a huge fee. Do you get it? No one would like to do what? Pay a huge fee. So it depends on how demand and supply controls the market. It depends on how demand and supplies control the market. So if the market is at the supply zone, for instance, that is supply zone simply means more sellers are on that particular asset. If more sellers are on that asset, it simply means a lot of people are shorting the trade. A lot of people are shorting the trade. And since a lot of people are shorting the trade, now the fee will be increased so that people can start to do what? Run away, because no one would like to pay huge fee. So most people will begin to run away on the short-term assets to the longer side, because at a point in time you can decide to either earn a funding fee or pay a funding fee. You can decide to either earn a funding fee or do what? Pay a funding fee. So if you don't want to earn, then you run away from the payers, from those who are paying. And if you don't want to pay, you run away from that particular asset, you go to the opposite side so that you can be part of those earning. So mostly, though, earning those things are just tiny, tiny coins. Paying to, they are tiny. But institutional traders, sometimes they just hide to just earn. If you have huge amount of money, earning funding fee is profitable. Earning funding fee is what is profitable. But then if you are like maybe any of us who uses $1 to trade, who use $5, who use $10 to trade, and funding fee may not benefit you much. Yeah, funding fee, because you just earn, even not out $0.5, maybe sometimes 0.001 cents. That is what you are going to pay, or that's what you are going to earn. So that is it. But then you have to value money too. You have to value money. So anyway, that is fine. Let me know. Let me see. I guess okay. Let me see if there are other questions. No. Does gas fee depends on FBA? No, gas fee does not depend on FBA. Gas fee does not depend on FBA. When we talk of gas fee in Royal Kill, the gas fee when we talk of gas fee, the gas fee depends on the profits you make. So let's assume your total capital is $100 and you make, that is your capital in the market is $100, and you took out of this $100, you made profit of, let's say, $20. The gas fee will be based on this, which is 20% of this particular trade. 20% of $20, that is going to be the gas fee. 20% of what? $20, that is going to be the gas fee. So that is it. Gas fee is not calculated or is not based on the first buying amount. All right. Should more light um should more light on isolated coins and cross margin. Okay, so by your explanation of liquidation, then what is the advantage of using cross margin compared to the use of isolated margin or other margins? So we have the cross and then the isolated. Basically, you have the cross and isolated. So now, what are the advantages? The fact that cross margin can liquidate all your funds doesn't mean that it is very bad. Listen, yes, it is very bad because it can liquidate all your funds. But the main work of cross margin is to ensure sustainability. Sustainability of your trade. Hmm? The main work of cross margin is to sustain your trade for you. Why? Because let's assume you have two different trades, maybe Solana and then also XRP in the market. Okay. Now your capital is $50. $50. If you are using cross margin, once SRP, the funds in SRP gets out of the fund, we get out of funds on SRP, it means you'll be liquidated. So if you are using cross isolated margin, over here you'll be liquidated on SRP alone with $50. Okay. Now, if it happens to be cross margin, this liquidation would never happen. Since Solana 2 is in the market, okay, since Solana 2 is in the market, this SRP will share funds. You see, sometimes when you are trading, the reason why you keep remaining in the market is because your margin is sustainable in the market. It simply means you still have more funds. Your margin is still having more power to control the trade. That is the reason you still maintain in the market. So since this Solana is having more momentum in the market or more funds in the market, SRP will drag part of Solana's fund into SRP, or cross margin, part of Solana's funds will be dragged into SRP so that the two of the trades can be in the market, can be in the what in the market, can be in the market. Now that this does not mean that um you that everything is done. Since this trade has been sustained in the market, you are free to go. If it happens, SIP now, since has been able to sustain, maybe it's left with something small for your take profit to be triggered before the market reversed. So now it will wait for market reversal before you make your profits. But in a case, since SRP is now sharing the same momentum with Solana, if it happens that the two of them becomes weak, who is going to sustain who? So all of them must go home. They must all go home. They must all go home. That is when you realize that now you get liquidated and SRP is out, Solana 2 is out of the market, and all your funds are gone. That is the reason. Because cross margin focuses on what? On sustainability. So hope that is clear. So advantage of using whole warehouse and real-time settlement. Advantage of using whole warehouse and real-time settlement. So mostly Sabin real-time settlements buy assets from the fifth call to infinity, from the fifth call to infinity, and you enjoy what you call sub cells on sub-in mode real-time settlement. So that is called extra profits. Since the market is going against you and you open margin calls, you enjoy sub-cells using sub-in mode real-time settlement. And then on the whole warehouse mode, it's mostly buy assets. That is first to fourth margin. Okay, your first to the fourth margin is good, and I think both whole warehouse and sub-in mode real-time settlement are good. They are all good. But then I mostly prefer sub-in real-time settlement since I open margin calls for my trade. Since I open more margin calls for my trade, I always want to enjoy profit on the sub cells. I always want to enjoy profit on the sub cells, and I'll opt for sub-in mode real-time settlement. All right, so let me see. There is no hand up. There is no hand up. So, and there are no other questions to ask. There are no other questions to ask. I believe this session has been so easy. I've been able to explain some of the things that you find it difficult to understand to you, and I believe you can use them, you can put them into practice. So let me see and see another two questions. Why does the cancel continue going against you without buying margin calls? Why does the cancel? I don't get what's the meaning of the cancel. What cancel are you talking about? Why does the cancel continue going against you without buying margin calls? I'm not getting your question. Okay, so why does the coin continue go against you without buying margin calls? Why does the coin goes against you without buying margin calls? Yes, if you don't buy margin calls, just like you have a car. If you don't stamp on brake and the car happens to accelerate, will you survive? Let me know. Will you survive? If you are driving and you don't stamp on brake and the car continues to accelerate, will you survive? Will you survive? Let me know. You are driving, you click on or you step on what acceleration, and you refuse to step on what brake. The car continues to accelerate. Will you survive? Yes, the answer is no. The answer is what? The answer is no. So the same thing applies to of trading without margin calls. That's how it simply means you've been exposed to high risk. So let me see. Say I try to navigate to Binance Trading View um through main trading view as you demonstrated in the morning session. I couldn't get through. Say what is the way forward? What's the way forward? Okay, so I think in our next technical analysis class, we would throw more light on that. We will throw more light on that. But I urge you go back to the YouTube channel to watch the video so that you can be able to get it. So how does reverse in futures trading work? So in Real Q, we don't use reverse. In Real Q, we don't use reverse. So when we talk of reverse, actually, it simply means, let's assume you went on long position and the market has changed in direction. So once you click on reverse, your close simply means you want to reverse, and reversing simply means you are going back. And it doesn't work automatic. Do you get it? It doesn't work automatic. So reverse, you close the trade. Once you reverse a trade, automatically it's closed. That is what you need to know. Okay. So also, even put margin calls and you don't put the button on it, won't buy. I'm not getting it. I'm not getting it. Also, even if you put margin calls and you don't put the button on, it won't buy. It won't buy. Yeah, so anytime you open margin calls, you just need to ensure you turn on the AI margin calls. Yeah, to turn on the AI margin calls. Yeah, so we have the Royal Q Revolution. We have the Royal Q Revolution. Okay, so you'll be the Rashid Sandy, you'll be the last person that I will answer your question. Then we bring this session to an end. So the margin call button is on. The coin does not buy them and ends the trade due to insufficient funding on the exchange. Why? Yes, of course. If the margin call button is on, coin does not buy and let me see, and it ends the trade due to insufficient funding on the exchange. So if there are no funds in the exchange, even if you open margin calls, it's nothing because the margin calls is going to be bought based on the funds you have in your exchange. So if there are no funds in the exchange and you've opened margin calls, how do you expect it to buy? It won't be able to buy. Do you get it? Do you get it? Very good. So using 20% of $50, which is 10%, how do you calculate the FBA using the number of coins? Since we choose coins on the futures. So over here, now, after identifying your first buying amount, there is no need to worry about how to calculate the rest. So now I know that my first buy amount is what is $10. Sorry, which is multiplied by my leverage 10, giving me $100. And I have $40 remaining. I have $40 what remaining. So all what I'm going to do is that I will decide on the number of margin calls to open. If I want to open 10 margin calls, that is going to be 40 divided by 10. That is going to give me 4. 40 divided by 10 is going to give me how much? 4. 40 divided by 10 is going to give me 4. So over here, it simply means that is $4, right? So over here, I'll just get back to my first buying amount, which is 100. My first buying amount, which is 100. So 4 divided by 100. Let's see. 4 by 100 give you 0.04. 0.04. 0.04. 0.04. It simply means with my multiple buy-in ratio, I'll be buying 0.04. I'll be buying 0.04, which is equal to what? $4. Which is equal to $4. All right. So let me know if there are any other things in the chat. Okay. So should we put on the AI margin calls in futures? There doesn't spoil anything to put on the AI margin calls. If you have margin calls open, why not? So at a point in time, you can choose to get back to close to turn it off. That is, if you don't want it to be buying or to be using all your money in the market consistently. That is, if you know how to direct it. In that case, you pause the AI margin calls. If it's buy to a certain extent, you pause the AI margin calls. Calls to be bought based on how you've calculated everything in your margin configuration. Then you leave it on. Hope it's clear. Hope it's clear. All right. So let me know. There are no hands up. Okay, so let's see. Okay, now what we are saying is simple. What we are saying is simple. You've done your calculations and you know you want to buy 20 margin calls. 20 margin calls. Now, the work of the AI margin calls is to be utilizing your money by buying the margin calls based on how you've strategized your bot to function. If you turn it on, simply means you want to reduce the risk at which it will be buying the margin calls. So if you are trading and you off the AI margin calls, that is, you are preventing the boss to do the actual work of buying more and buying more. You get it? So in that case, if you open margin calls and you know how you've set up your trade, the AI margin call is on to be used to use the margin call that you've opened to work. When you turn it off, you're not giving it access to use the margin call that you've opened. So unless maybe otherwise, when you are turning AI margin call off, it will be your personal reason. But if you want margin calls to be bought consistently based on how you've opened the margin calls, then AI margin calls must be on. All right. So I guess I've been able to. Oh, who is saying it's not clear? Okay. Is it clear now? Is it clear now? Is it clear now? All right. So I guess okay. Someone saying no. I don't know which aspect don't you understand. Which aspect don't you understand? Which aspect are you not getting now? Can you ask your question? Which aspect are you not getting it clear? Now, what we are saying is simple. The work of AI margin calls, the work of AI margin calls is to buy the margin that you've opened, right? Without you being there to be manipulating things. You've opened 20 margin calls. AI margin calls should be on in order to be buying these margin calls. If you turn it off, it simply means you are actually controlling things by yourself and you don't want the margin calls to be bought consistently as you've opened, right? So if you turn the AI margin call off, if you turn it off, you are there to control things by yourself. When it is on, it is there to do the work that you are not there to do. So AI margin calls are there to utilize your capital by buying the margin call that you've opened. That is all what we are saying. So if you turn it on, you turn it on because you've opened margin calls for your trade and you want to be secured in the market. That's the reason you open the margin calls. I guess it's simple. I guess it's simple. I guess it's clear. I guess it's clear. I guess it's clear. Is it clear? Is it clear? All right. All right. Oh, okay. So, guys, I think enough question has been answered this morning. The person who was asking about the AI margin calls, I guess all of you understood what we mean by that and how it works. So I suggest we end here. I suggest we end here. Can you hear me? Let me know if you can hear me. Give me one in the chat.
We are hearing you, please.
All right. All right. So I suggest we end here because I was asking because the person who asked about the AI margin calls lastly was not responding again. Was not responding again. All right. So I think there are no other hands up. Okay, Patrick. 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 You can see one Patrick, your hand is up. So you've been asked to unmute. Ask your question. Patrick.
Good morning, my leader.
All right, good morning.
Thank you for the great job you are doing. There is a place, these calculations you made now, there's a place I did not understand. You see, there was a place you divided 40. Then you got 4. Then you went again to divide 100. How is it? It made me confused there. I don't know how it came about. After removing the first buying amount, you divided, I don't know whether by 4 or 10. Then you now divided 4 by 100 and get 0.04. It got me confused there. How? I thought we were
I
going to
see.
divide 40 by.
All right. All right. Chillax. Chillax. Chillax.
Okay, boss.
Chillax. Okay, so now okay, so let me briefly explain that part. Now, I have $50 capital. I have $50 capital. I've just used 20% of $50. So $50, 20% of, let's see, $50 times 20% will give me 10. Very good. And then I said my leverage, my margin amount, so my amount is $10. My leverage is 10, which is 10 times 10, giving me 100. So it simply means my first buying amount is 100, right? Very good. Then my capital remains $40. Now I'm going to open 10 margin calls. So 10 divided by that is going to give me 4, right? It simply means my multiple buying ratio, each time the asset drops, I'll buy $4. I'll buy what? $4. But then on the multiple buying ratio, it asks of the number of times to buy, not the amount to buy, but the number of times to buy. So if I want to know the number of times to buy, I just divide that by my what? By my first buying amount. And what was my first buying amount? That is, my first buying amount happens to be 100. So 4 divided by 100 will give me the number of times to buy the asset again. So let's see. 4 divided by 100. The 100 is my first buying amount. That is what gave me 0.04. So multiply 0.04 by 100 and see if you won't get 4. 0.04 times 100. That is going to give you 4. So that's how we wanted to get a 4, right? So it simply means each drop you'll be buying 0.04. Each drop you'll be buying 0.04 times. Each drop you'll be buying 0.04 times. All right. Now I hope I've been able to solve the confusion. Mr. Patrick. React in the chat for me to know if I've been able to solve the confusion. Have I been able to solve the confusion? All right. All right. Okay, so ladies and gentlemen, your hand is still up. I don't know. You've been asked to unmute. I don't know. Okay. So, let me see. Okay. So I guess that is all for today. So if you're not on the Revelation platform, I guess maybe you may miss, because in the course of the day, if you are free, if you don't understand anything, feel free to ask on that platform, and great leaders are there to assist and engage everyone to ensure we all make progress together. So it's Friday. Let's go out to make money. Let's go and trade. Let's inform other people that Royal Hill is here to roll and rock. Let them use the boat to activate. Teach them the process. Let them trade. Let them make money. And keep repeating the process. Keep repeating the process. Keep repeating the process. And I think that will be the easiest way you can grow. That will be the easiest way you can do what? You can grow. So let other people know about Royal Kill. Let them know about what? About Royal Kill. Let them use Royal Kill, and let them enjoy the fruits of what? Of Royal Kill. And together we can all make the journey an interesting one. Together we can all make the journey an interesting one. So please, let's all get prepared. We shall still meet again. Let me drop the meeting link. I said the meeting link, the group link here, so that those who don't have access to it can get access to the meeting. Let me see. Okay. All right. Okay, so yes, technical analysis classes every day. Technical analysis classes from Monday to Friday. Monday to Friday. Monday to Friday. Monday to Friday. From Monday to Friday, we have the session called the technical analysis session. So pay attention to that. All right. So guys, I think we will end here. If there is anything, you can ask your question on the platform if you don't understand anything. Stick to your upline and let your upline assist you. If you think you don't have an upline, leaders are there that you want. Just seek for a transparent person, a good person who can also be your mentor to guide you. Don't stress anyone. Don't go and share your account with anyone. Listen to me whilst we are living here. Please don't go and share your account with anyone. Don't call for any assistance. I've always been telling you, peanuts are for monkeys. Peanuts are for what? Monkeys. There is nothing like free lunch. There is nothing like what? Free lunch. So better get a mentor, let the person mentor you, or work with your upline. Stick to your upline, let him teach you. If you think your upline can't teach you, go and get a mentor. Stop going into other people's DM, chatting them to assist you, set up a trade, do this. They will end up scamming you. So better get a mentor who will guide you whenever you need assistance, and that will be your safest journey. That will be the safest way you can get to your destination. All right. So on this said and done, thank you for being here this morning. Thank you for your time and thank you for learning with us this morning. We shall still meet again on another session. I wish you all the best, and it's Friday. Go out there, go and let's share Royalty with other people. Go and trade to make profit as well. And together we shall make Royalty a great revolution. A great revolution. Go on our YouTube channel, watch the videos there, subscribe, and then also learn from it. Okay, so ladies and gentlemen, let's end here. We shall still meet in another session. Take care and love you all. Have a good day. Bye.